lot of questions about where the economy goes from here. How much more spending can we really handle? Is it going to be a very dark winter, as Joe Biden promises? Joining me right now, our good friend, one of my smartest friends, I like to say. He's a physicist. He's a mathematician. He's a former attorney, legal scholar. I know I'm leaving some things out. Economist, of course, having worked for the Central Bank of Norway. I'm so happy to have back with us my good friend, Neil Grossman. Neil, good to have you here.
Thanks, Trish. You left out grandfather, too, by the way.
That's the most important part. That's the most important part, and husband to a wonderful woman. Let me get your take sort of on what we should expect come January 20th into February, into March. You've got the COVID-19 task force for Biden assembling right now, and you've got a doctor on there that says we need to shut down for 6 weeks. And he actually, this is a direct quote, said we can pay people to lose their jobs because the savings rate is so high and interest rates are so low, so we can just borrow this money. I know that just has to give you heart palpitations, Neil. So your take on that?
I don't really generally believe in handouts. I mean, if the government wants to lend people money, that might be one thing. But at the end of the day, simply printing money and handing it to person A means somebody else has to pay that back. So, we were talking about this earlier. It's sort of like musical chairs. You're moving one chair from the future into the present, but there's a seat missing when you get to the concert down the road. I think we both know what's at least in line from the Biden administration. They want to spend an awful lot of money. That's both in terms of general policy as well as, basically the more money you hand out to people, often the more votes you can buy, the more people become beholden to you. And I think there is a general unwillingness to sit back and tell people we don't have this and we're going to have to figure out a more intelligent way to address some of these issues.
When you talk about a more intelligent way to address the issues, I mean, let's tackle COVID here. Good news, right? On the vaccine front, both Moderna and Pfizer have gotten through stage 3 trials with some very promising results. So that has been sped up, by the way, thanks to Operation Warp Speed. No, I don't think Biden wants to give Trump any credit for that one. But nonetheless, really good news on that front. But, you're still in this challenging time, right, from a health perspective, because you're going into the dead of winter and people are more likely to get sick, and they're seeing the escalation of these infection rates. So how do you manage to keep the economy alive and going through a challenging time without giving out the stimulus?
Giving out or maybe lending it are two different paths to take.
Would you consider lending then? You say giving out and lending are two different things. Do you think?
As a general matter, if you're going to give somebody money and they have legitimate need, the answer is that they're the ones who owe the money back. I don't think simply saying here's $1 for you to spend and I'm going to go find somebody across the street to pay for you is, number one, in the long run. I don't think it's stimulative in any event. I don't think. I mean, there's just so much moral hazard in what we're doing and the way we're doing it. Keep in mind also the amount of fraud becomes significant. I mean, look, they tried to save a lot of companies, and yet the number of companies that are out there going under are growing pretty significantly. I think the answers in this are, look, let me try another one with you also. We've stopped letting landlords and people who have small businesses making, real estate available to people living there from collecting. They're in trouble. What's going to happen on the other side of this? What would happen, for example, Trish, instead of saying to the person on the street, here's $1, we say to the landlord, here's $1 to pay for your tenant. I haven't really thought it through yet, per se. Or you say to the restaurant owner, we'll lend you the money, we'd like you to, et cetera. And you don't give it to the person goes in and gets a meal at half price for it.
What you're talking about is creativity. And, to your point, you haven't thought it through. I haven't thought that through either. But you're saying, let's come up with some more ideas, right? Rather than just printing money and handing it out.
And not thinking about what the consequences. Look, I'm a believer that, you don't create something out of nothing. We had a $3 trillion CARE Act, which has imposed a $3 trillion obligation going forward. So, for example, I think you'll like this. Elizabeth Warren tweeted this morning about forgiving all the student loan debt and what a drag it is on the economy. The total amount of student loan debt is about $1.6 trillion. We spent twice that amount on the CARES Act, right? And I'm not sure what we got for it in a big way, other than creating another obligation down the road that's really, really large.
Joe Biden's talking about $3 trillion more. He may not get to first base because it may turn out that Georgia goes to the Republicans. And if you've got the Republicans there, they're going to really block a lot of this spending in a rather large way, I would think. So it may just mean we've got a dark winter all around. There's no stimulus. There's no nothing. He can get up there and talk about kumbaya and let's all be united, et cetera. But I don't know if he's going to be able to be effective on the policy front without the backing of the U.S. Senate. Your thoughts, Neil?
That's correct. Now, let me just say one more thing, Trish. I do not believe any of this is truly stimulus. Again, this is the rearrangement as opposed to the actual long-term impact. You spend $3 trillion you don't have, you have to pay the $3 trillion dollars back. So if you take a long enough time perspective, the net of this is not going to be particularly stimulative. It makes today look better, but it does not tell you tomorrow is going to look that good. And we had $3 trillion already. There's going to be, whether it's 2 or 3 trillion or 1.8 trillion more on top of that, because I don't think the Republicans are necessarily going to stand in the way of something that's relatively significant. They may not go all the way to what the Democrats want, but I think if this country is shutting down for the next 3 months, for argument's sake, because COVID is accelerating and we're not quite ready with vaccines, and we don't have the hospital space and the medical staffing to fully deal with this, you're going to get some sort of, I assume, negotiated outcome to help us through this. Look, the states, right. So the point of all of this is, and then on the other side of that, he's going to be coming back and saying to to Congress, I want $7 trillion over 10 years. Some of it probably for very legitimate purposes. Listen, infrastructure in this country needs significant upgrade, right? And, that's in his policy. Again, who pays for it's another issue. But, there's that's the type of long-term investment that I think both parties like to see. I have no clue what's going to come out of his Green New Deal, which I think is an extraordinarily expensive concept. That's what, $3 trillion he's talking about spending to change the direction of the country on how we, operate from an ecological perspective. He's got, again, I think they're talking about bailouts of student loans or significant adjustments in student loans. Ultimately, you're going to run up quite a tab. And on the other side of that, he's talking about taxing businesses and individuals in the very upper echelon. I think 90 to 95% of what he's indicating he wants to generate on the revenue side, which still is well short of what he wants to spend, by the way, is going to come from, the upper, 1 to 5% of taxpayers.
Which I know has, you really concerned. I should point out that you've written some very good pieces, actually, for TrishIntel.com. Very good opinion pieces on taxes, including your frustration during the Obama years with how there was this assumption, right, that you could just go and tax people more. And, for you, I know, Neil, you find that sort of inherently un-American and disingenuous and not fair.
That's right. I find that, particularly the way the dialogue comes out. I mean, they point at people in the upper echelons and say, you don't pay your fair share. I mean, you define it. There are people who find ways to reduce their tax burden significantly, but a lot of us pay significant tax burdens. I mean, percentage and absolute amounts. And, at some point it does become, it's almost oppressive, number one, listening to it. And number two, it tends to depress, the drive and desire to innovate, to succeed, to create long-term, to create long-term outcomes that are far better than where we're starting from. All you do is look back. Again, there was a, this segues us through a lot, but this 07, 08, 09 crisis was disastrous, and you and I both have discussed this. I place much of it at the foot of the Fed, right? Zero rates, or very, very low rates, and predictable outcomes that are designed to eliminate risk and from the decision tree, and to promise people the pot of gold at the end of the rainbow, no matter what actually happens, is a problem. And ultimately, participants in the capital markets ultimately following the path of free money destabilize this economy by pouring money into untenable real estate investments, which became known as the subprime crisis. And it almost brought this country to its knees, right? It did bring this country to its knees. Luckily, we were able to slowly stand up, but it was not exactly a rip-roaring outcome, right? We grew after the crisis on average a couple of percentage points a year at best.
No, it was lousy. I frankly, I blame Barack Obama and Joe Biden for a lot of that. I blame the Fed, but then the aftermath, I blame on those guys because, the world was their oyster. They could have done a lot, but they didn't, and they kind of got in the way of things, and it was constant Debbie Downer. My goodness, like I said, no cheerleading, no excitement for when we were doing things right. They just wanted more and more policy-wise, and they couldn't get to first base, frankly, on any of it policy-wise. There was no innovation, so consequently it became the Federal Reserve. They were the only game in town, Neil.
Right. Well, first of all, the Obama administration, as we talked about, I found accusatory, right? How dare you have, number one. Number two, for all of the rhetoric, under President Trump about him being difficult, President Obama drew a line in the sand and said, you send me any piece of legislation that does X, Y, and Z, and I'm going to send it back to you, which ultimately, by the way, Trish, ended up in virtually almost nothing getting done. Obamacare got done, and I think we ended up outside of some of the provisions in the rescue early on. I don't remember too much that was accomplished from a legislative perspective during those 8 years.
And so consequently, at least from an economic policy perspective, look, he got his Iran deal done, lovely. And he got Obamacare done. But in terms of the actual sort of meaningful, fundamental influence on the economy, I don't think he really was able to accomplish much. So, I don't have high hopes. I don't think you do either for the incoming administration in terms of what they're going to be able to accomplish. And what's the takeaway for investors with just a minute left? How should people be approaching this? Because right now the market's still on fire, and you got Goldman Sachs predicting 4,300 on the S&P by year end 2021. You have very strong targets as well over at Morgan Stanley. How should people think about it?
Look, I'm extremely concerned. I think the stock market now trades at almost S&P trades at almost 30 times, 27 to 28 times, which is just about twice historical averages. The only reason that the market's here is you've got a Federal Reserve that's basically printing money, functioning in the form of its intervention policies, and a government that's standing there with population expecting handouts to continue and to continue. I guess if the government's going to print $3 or $4 or $5 trillion in the next year, maybe the stock market goes up, but I think it's going up on air, and I think the risk continues to grow. That the only thing that we're looking at is a continuing series over the next number of years of the Federal Reserve having to theoretically come in and bail out every market in its way. I don't think this market is stable anymore. Now, that's me. Again, I will tell you, you know me, I don't believe you can make, something out of nothing. I believe, physics tells you that. And I also think that what the Federal Reserve has done is it's becoming what I call the enemy of the rational. You cannot make rational decisions on valuations or long-term investments because they continue to tighten or shorten the time scale and the expectations and the consequences of markets going down are becoming more and more profound. Can you imagine if the stock market loses 50% of its value in the next 9 months or 12 months?
No.
Why not?
Why not? Because, well, to your point, we've got a Federal Reserve that's there, that's willing to extend its arms and catch, right? Just catch it if need be. And so that's why we can't conceive of that happening. I mean, I can sort of conceive of it happening because I'm a little like you, Neil, and I don't trust this idea that you just keep printing. I think at some point there's going to be consequences for the actions. But listen, I think this is some important advice for everybody to keep under consideration right now. They have become the enemy of the rational. Neil Grossman's words, you can read his columns on trishintel.com. You can hear him here on American Consequences with Trish Regan. Neil Grossman, thank you.
Trish, always a pleasure.
Fascinating edition, as always. Make sure you tune in every single week here to American Consequences, and you can catch me every single day on Trish Intel. There's a lot going on, and I'll tell you one thing, truth matters. You know I am fearless, and I'm always going to get to the bottom of everything. So make sure you subscribe to American Consequences, Trish Intel, and I'll see you right back here next week and tomorrow online.